The Nasdaq and semiconductor stocks near two-week lows. The Biden administration apparently considering severe trade restrictions on companies still making advanced chip technology available to China, despite American export curbs. Meanwhile, Donald Trump is questioning U.S. defense support for Taiwan. He says the island should pay for its own defenses. So this U.S. election, less than 4 months away, which candidate is likely to mean more volatility in the market if investors decide one of the two contenders, Joe Biden or Donald Trump, has a decisive lead? Let's bring in Amy Wu Silverman, head of derivative strategy at RBC. Amy Wu, thanks very much indeed for coming on the show.
Great to be here.
Start off with this sell-off, if you would, in NVIDIA and the other big chip stocks. What is your read there?
Yeah, we're watching this very closely because one thing we've been saying all year long is if tech goes, the market goes. And unfortunately, that just boils down to math because it's such a heavy concentration in the market. And one thing we can tell you from our market, from the derivatives market, is we have seen substantially increased hedging. So folks looking for protection to the downside. And that was not true for any of the other past earnings cycles, but it is true for this one.
Sorry, give us that again. People are looking for hedging or they're not?
Yes, they are. So in the past earnings cycles for NVIDIA, people were actually only looking for more upside leverage. They were looking to buy call options. They were quite exuberant, but as we look ahead to this earnings cycle, it's a very different story. It's almost a 180-degree difference. People are looking for downside protection. They're looking to hedge, and the sentiment around stocks like NVIDIA and the Mag 7 has been much more bearish.
What has caused this weakness over the past 2 weeks or so in the big techs?
It's a great question. I think there's sort of a lot of cross currents going on. One simple explanation is just positioning, so meaning, you know, as we headed into the beginning of the year, I don't think as many people were participating in the AI trend. I think more folks are just long. And when you are long, there is more of a natural need to hedge. Mm-hmm. But outside of that, obviously, you know, you've had better data that would suggest that we're going to get more rate cuts than we had initially anticipated. You've sort of heard that commentary out of Powell recently. And you can kind of see when you start to get this priced in, you get that rotation in the market. You do get the IWM Russell 2000 outperformance relative to S&P. Mm-hmm. I think Thursday was the most historic spread on record. And we've continued to see that the last few days.
You have a Trump basket and a Biden basket. They're each collections of stocks that you guys reckon will do better if one or the other candidate wins. Now, can you give us an idea what's in the Trump basket? Give us one or two of the stocks that are in there.
Yeah, so one thing that we're looking at is, you know, I think when people initially put together these baskets, they were very much looking to the 2016 playbook. So things that would have done better in the 2016 playbook of Trump, if you will, are more old economy stocks, industrials. You know, I can't speak to specific stocks, but I can tell you those are the sectors that are more, you know, concentrated in that basket versus Biden. But one thing I've said is when you look at these baskets, I think the knee-jerk reaction is a little premature because one thing that we know about Trump is he's just a highly volatile candidate, highly unpredictable. And in particular with Elon Musk backing him and with more of Silicon Valley, you know, I wouldn't be surprised if the stocks that are actually going to do well, not necessarily the ones that did well in 2016.
That's interesting. Mr. Trump has talked about radically higher tariffs on China. We'll have to see. I mean, he did last time when he was president. He put on import levies. So in your Trump basket, do you have industries that would tend to benefit in the United States if he puts up new barriers?
Yeah, that's exactly right. And, you know, one reason I think we're seeing something like Russell 2000 rally a lot, it's not just the rate story. I think it's the idea that the prediction markets have more of a definitive Trump win. And that tends to be more companies that are less exposed to international revenue. So Russell 2000 tends to be more domestic companies. So it's not surprising that you're seeing that rally because they're more insulated from something like tariffs to China, for instance, or may have exposure to revenues outside the U.S., whereas global tech and mega cap tech tends to be the opposite.
And just to reiterate, you made this point, you felt this jump in the so-called Trump basket after the assassination attempt was premature, people just jumping on it. Is it part of your model, trying to weigh a Trump victory versus a Biden victory?
Yeah, look, when we get to the prediction markets, I would say all we can do, unfortunately, is look to history. And one thing I can tell you is that with more than 4 months to go until the U.S. election, I still think anything can happen. I think people are trading like it is going to be a definitive Trump victory. But the reality is people have to go to the polls, and things have been very surprising in the past.
Mm-hmm.
We have a headline VIX number that's in about the 13 to 14 range. In past elections, we've seen this spike more than 10 to 20 points because people are sort of caught by surprise by who they think the winner is. And we know polls are notoriously unreliable.
Oh, yeah.
So I would expect more volatility potholes than I think are priced in right now.
Thank you. That's a good reminder, all right. You do say, though, that even though people have been pulling back on their tech and AI exposure, how these stocks perform in this current earnings season will be a crucial signpost for the market.
Yeah, I think it'll be absolutely critical because one thing we've been looking at for AI is what's been doing very well is the investment in AI, but not necessarily the output from AI, meaning investors have been relatively patient, right? They're saying that AI is the future. It's this great secular trend. Okay, but where's the actual efficiency coming from? I think they're going to want to see more hard numbers. I think they're going to look for that this earnings season. And if we start to not get that, then I'd be nervous about the fact that we're very concentrated in this market. It's a very bad breadth market right now.
Even though it has got a little better in the past week or 2 weeks.
That's right. That's true. It's still gotten a little bit better. But look, the heavyweights are still your Magnificent Seven. It's still your NVIDIA. And I would say most folks are still quite long these stocks.
And just finally, before we let you go, we're tight for time. Volatility as measured by the VIX, for example, still very low?
Yeah, still incredibly low, almost historically low. And I think a lot of it is because it's not capturing a lot of these undercurrents we see. These violent rotations don't get captured in that VIX number. And I think that's something that could change as we go to the summer months and we go through earnings.